Okay, Matt, Saturday morning, I have an idea what you were doing Saturday morning. Now, granted, I'm in Virginia, you're in South Carolina, but I bet you we were doing the same thing. Were you reading Buffett's letter Saturday morning?
I was, and I was writing about it. I'll tell you, my wife loves these 2 weekends a year when something significant happens with Berkshire, because that always happens on a Saturday. So I have to leave the kids with my wife and, read what old Uncle Warren has to say.
Well, your kids eventually will be old enough where you can just let them sleep in and you can just wake up early and get that. Because that's basically what I did. The kids were still sleeping in my house. I just woke up, had some coffee, sat there and read the letter. It was a peaceful time to do it. Hey, so listen, I mean, all sorts of opinions, all sorts of little, nice saws to pull out of his letters every year. What stood out to you in this year's letter?
Well, the fact that they're still having trouble making a big acquisition. The biggest question on my mind going into the letter, well, let me back up. The biggest question going on my mind into reading what Warren Buffett did with his stock portfolio this quarter was the market was tanking in the fourth quarter. He must have been on a buying spree. Well, it turns out he wasn't.
Yeah, what's the deal with that?
Right, so that was my big question. I was hoping he would have spent like $50 billion in the stock market during the fourth quarter. But that didn't happen. He was actually barely a net buyer of stocks.
Killing me.
And he keeps mentioning how valuations are just insane when it comes to acquisitions. He mentioned this in his letter. On CNBC this morning, he said Berkshire was very close to making a really large acquisition in the fourth quarter. I'm curious as to what it is. He won't tell.
I was going to say, what was that, man? What was it?
I'm wondering what it could possibly be. He said it was a big acquisition, even by Berkshire standards.
Yeah.
So... and in his letter, so now he said that stocks were still the best way to put money to work. And now that we see that Berkshire was trying to make a big acquisition, and so they were probably holding cash back for that, which is my guess, my big takeaway to why we didn't see more stock buying activity. And he also said going forward in 2019 to expect the same. He said valuations remain, I mean, not his word, but what he's trying to say is valuations are kind of ridiculous right now when it comes to what companies want to be bought out. So expect stocks to be the best driver of value going forward, and that's what Berkshire wants to put its money into. It's also worth noting that Berkshire did buy back a little bit of its own stock this quarter, not a ton, but that Warren Buffett says that over time he expects these to continue. In fact, Berkshire is dropping book value as as Buffett's preferred, performance benchmark, the buybacks was one big reason.
Yeah.
He said, not only do Berkshire's businesses distort the book value over the years, but the buybacks, as he buys back shares at a premium to book value. You're not going to find Berkshire for less than book value. As he buys shares for greater than book value, it's going to further distort the company's price to book ratio. And so they're just scrapping book value altogether. And I take that as a positive sign that Buffett expects future buybacks, because he can only buy back stock when him and Charlie Munger agree that it's a good deal. So it seems like he still thinks that.
Yeah. I think everything you said, I agree with totally. I thought it was interesting to hear him harp a little bit on that $20 billion cash position. He wasn't going to breach that. He always wanted to make sure that they were never caught needing cash for any reason. We always get that question from listeners, how much cash should I keep in my portfolio at any given time? And that's always a debate. Everybody's got their own sort of opinion on that and what they do. But it was just an interesting perspective there. I encourage folks to go read that letter and read that part about what he said in regard to keeping cash in his balance sheet. The other thing that he was talking about that made me, it got me a little bit, I was a little bit giddy when I was reading this, Matt. I'm not going to lie. I mean, I'm not a Berkshire shareholder anymore. I sold those shares a little while back because I felt like, to me, there was more opportunity in Markel, given the size of Markel versus the size of Berkshire. It was less about Berkshire and more about just the opportunity with Markel. But when he was reading, when he was talking about, he was gushing about their wholly owned businesses being that most valuable grove in the Berkshire model there. that really, I get excited about that because I see Markel doing the same kind of thing with their venture side of their business. And they're just getting started there. But that Markel venture side of the business now, it brought in $2 billion in revenue over the past year. And I think we've seen a lot of growth there. And I do think that they are trying to build that side of the business out very much the way that Charlie and Warren have built out Berkshire Hathaway. So just I don't know, made me think a little bit, of the position in Markel and how happy I am to be an owner of those shares.
Yeah, I don't disagree with you. I own both. I think Berkshire still has it still has market beating potential, but it's nothing that's going to really excite you, or it's not going to beat it's not going to return 20% a year for the next 2 decades. But Markel's certainly good.
Yeah, well,
and not that it will, but it could.
It could, yeah. Yep.
It's not possible with Berkshire. So.
Yeah. Well, certainly we recommend anyone listening go to the Berkshire Hathaway website there and click on that annual letters tab and read the most recent letter. They're just always there's something always in there that makes you see a new angle. That's why we read them, and they're always really enjoyable.